Okay, folks, so over the next 48 hours, a lot is going to be happening. Number one, we have huge catalysts for several stocks that are already running up huge in anticipation. And then number two, we have huge data releases that are coming out tomorrow that will have huge market-wide impacts. And in this video, I want to bring to your attention exactly what's going on and what you need to know. And the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with stock updates. BBIG making moves this morning, up over 20% at highs ahead of their shareholder meeting on Thursday, and it has its Cryptide dividend spinoff next Friday. And with estimates of short interest at about 26%, I think this is a very, very intriguing setup. And on one hand, you have tons of people going and throwing money at BBIG, expecting more runs prior to both catalysts. And on the other hand, you have short sellers that are like, hey, these people are going to sell out, and they're going to sell out in a panic right after the catalysts come through. My thought process on the stock is that odds are very, very strong that a lot of the longs in this are waiting for that last hurrah, that last opportunity for BBIG to give a huge hype wave. But whether they stay post spin-off dividend is a whole nother story. I think it's unlikely that a lot of these speculators are going to stay post spin-off. And the bigger opportunity here is more of what we've seen today, which is people buying in speculation and pre-anticipatory running. Okay, next, Plug has been on a very nice uptrend for good reason. If you've been following this week's briefings, you probably already know that Plug is going to be holding an analyst-heavy event, which is called the Plug Symposium. Now, why did I include this as a notable event? Well, because last year's Symposium heightened press coverage so much for Plug that it ended up going from 11.50 to 75.59 in the span of the next 4 months. Now, I'm not saying it was the Symposium that caused it. Plug had already been on a strong growth trajectory before that. But what it did was dramatically speed up the awareness for the company and what it offered, and made it a lot more likely to attract capital and attract a lot of the euphoria that we had towards the end of last year, beginning of 2021. Do I think it's going to be as good as it was last year? Probably not, but I am anticipating that this year's edition is going to have a lot of heightened positivity for Plug as well, which is much needed for the stock. I mean, this is sitting down 60% from all-time highs at the beginning of 2021. Meanwhile, you have analysts that don't really like this stock that much actually saying that this is valued at $40, projecting 35% of upside. What does Plug actually do? They are in the green energy space, making hydrogen cell systems that replace conventional batteries in electric equipment and electric vehicles. Where do I think this is going to go? Well, I think this analyst event on Thursday is going to give it a ton of volume boost. That is likely going to be more positive than negative, especially in the pre-anticipatory run. There's a strong correlation between how growth stocks trade and how much attention they're getting at any given moment. And with all this attention brought on by an event that's largely just marketing Plug's products, well, I'd argue that you get some short-term blips of opportunities. That being said, I'll be the first to tell you, in the long run, Plug still has a lot to prove. Okay, OCGN. So OCGN has followed a general rumor-driven pump and dump for the last 6 months. It's now broken all previous pump highs dating back to June. We briefed this morning that it was up on anticipated further approvals after partnered COVID-19 drug gets emergency use approval in India, and WHO recommendation is largely expected later this month, but they've been saying that for a little while. Just for a rundown, OCGN partnered with an Indian biotech company called Bharat Biotech, specifically for building out the Covaxin vaccine. The deal is that OCGN gets the exclusive rights to sell it in the North American markets of Canada and the United States, whereas Bharat Biotech is selling it in India. And this emergency approval for kids in India is a telltale sign that, hey, wait a second, if they've approved it for even kids in India, maybe it's more likely that in the US it'll get approved for at least adults. And it's led to a lot of speculators buying in, expecting that. I also said that shorts are getting the heat turned up on them here. I was referring to the 30% of short interest on the stock. We did see some covering today, but not much, and with short sellers betting that this is going to drop down huge. If this does get approved in the US or Canada, shorts are going to get their bluffs called real badly. Okay, next, what is the story with GWH that popped up 100+% today? Well, generally speaking, with newly traded stocks that come via IPOs or SPAC merger, this one was the latter. Well, you tend to get a lot of initial hype that rallies the stock massively, and then the euphoria dies off and you start getting a picture of the real value of said stock. That's happening here 100%. But as for the company itself, this is ESSTECH, and it has an interesting take on batteries, which are made up of iron, salt, and water, and are thus much more environmentally friendly. You look at a traditional battery that tends to have a combination of materials like acid, lead, nickel, mercury. All of these things disintegrate into the environment and are very, very toxic. So you can see how while governments are pushing us in the direction of more sustainable energy, and industries themselves are trying to gear towards that route, these types of batteries are definitely going to be a hot commodity. The company also reports data that they are not just safer, more sustainable, cleaner, but that they are very effective, storing power for 6 to 12 hours with unlimited charge and discharge cycles, unlike traditional batteries, which of course have a limited life cycle. You can only charge a lithium traditional battery so many times before it starts depleting, and eventually you got no battery anymore. The company also has the backing of Bill Gates through his investment fund, which is good or bad depending on your view of Bill Gates, but he is a good businessman and he is trying to invest in sustainable technology. But the bigger picture here is that the demand for energy storage is exponentially growing. You look at the number of states that are more and more mandating green energy, and it's not hard to see political tailwinds favoring companies like this either. The addressable market here is quite frankly huge and is going to be much, much bigger in the upcoming decade. A lot of people shite on the sustainable energy sector. Oh, it's expensive. Oh, there's a lot of hassle. But the minute that sustainable energy becomes much more practical and much more cost effective and helps companies' bottom lines, all of a sudden you're going to see everybody become environmentalists. We've already seen that happening in many situations, and this company, believe it or not, is creating a situation where it could be a lot more cost effective just to use one of their batteries. So what's special about this business model is its cost to produce is much lower than its lithium-ion competitors, creating a competitive edge if they manage to scale before their competition can. I think that in totality what they are offering is very unique technology, competent leadership, and now a ton more capital from which to execute their goals on. But again, companies always trade in two stages. You have the hype stage when everybody's learning about it and buying it and FOMOing into it, which be my guess to trade as long as you risk manage your position. But as a long-term trade, I'd want this to start settling out much lower. Okay, lastly, in terms of what to prepare for with market catalysts, well, on Wednesday tomorrow, we have the next edition of the Consumer Price Index report. This is, as you know, what tends to drive Fed policy decision making. And the top line total average here, where it says all items, can often drive a lot of market action for the day that it's released. And we had an overall downtrend of inflationary growth rates since June, with July and August being lower and lower, partially driven by the slowdown of used cars and some of the other pricing pressures that got way out of hand. But this time around, you have energy and commodity prices booming again. You have prices almost everywhere booming because of that. You have millions of consumer goods stuck at ports trying to get into the country, and there's no workers to fulfill said orders. There's so many bottlenecks out there that I would be surprised if this is good news, but perhaps we'll get some new trend data. We also have the Fed's minute releases coming out tomorrow. In the past, these tend to give a ton of clarification on the level at which we are going to be tapering, the Fed's economic outlook, and whether they have changed at all. Obviously, the big overall question that needs clarification is, hey, the Fed infamously projected that inflation was going to be transitory and start stagnating and then going back down. Obviously, eventually, when supply chain issues start subsiding, you're going to start seeing a lot of those growth rates on inflation start subsiding as well. But because in a lot of situations, supply chain shortages aren't getting better yet, and in many cases, they're actually getting worse, well, it begs the question of how much of a problem does the Fed see that? And how aggressive are they going to act to curtail it? The more aggressive they react, obviously, the lower you'd expect the stock market to trade at. But because we are still right in the depths of a crisis, we need clarification on how far the Fed would be willing to go to taper, which of course is a massive, massive kerfluffle because supply chain shortages cause not just prices to go up dramatically, but also economic growth to go down dramatically, and eventually consumers start having less money, and with less money, prices for goods and services that they need are also going up. At the end of the day, how long are we going to be in this environment where this is going to be a big scare? Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course our daily morning briefings, where we brief on what's happening in the market each and every morning, as well as my favorite catalysts and what my thought process is on them, I'll go ahead and put a link to ZipTrader U below. Make sure to watch the video on the website. I'll walk you through everything you need to know about the course so you can decide whether or not it's a good fit for you. FUD Stopper 50 will get you $50 off before checkout. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to public.com/ZipTrader. They're a fantastic broker, and you will get one free stock when you sign up and deposit just $1 using our link below. Anyways, folks, that caps off the video, and I'll see you in the next one.